what's more important, the market, the deal, or the operator, right? And say, it's the operator or it's the deal specifically. And usually a deal comes to you first, but what do you look at? How does this look? So I typically start, the very top thing typically is the market, because I think that if you're in a market that's a growing market, growing in population, it's a growing as far as number of, certain types of businesses or certain types of demand for that specific asset, you're going to do really well. Even if there's kind of mediocre performance, because you're in the right market, the rising tide raises all ships. I think that's the most important thing. Secondly, it is, and it's very important, is the operator, and does the operator have similar values to you? Is this a rinse and repeat for them? Have they done this before? Is it totally new for them? Or do they have, like what type of goals? What does it actually look like for the things does this fit in with kind of what they've done before?
You're listening to the Accredited Investors Only podcast, presented by Accredited Life.
All right, Bronson. Hello, welcome to the show. How you feeling today?
Hey, Peter, I'm good. I'm getting over a cold, but man, I'm excited to talk about real estate and talk about what's happening and just lots of exciting stuff to talk about.
Awesome. Well, it's giving you that nice little raspy sound. You sound good.
Thanks, man. I got that little voice, yeah. The deep DJ late night DJ radio voice. Right?
Exactly.
Smooth on Peter Niles' show.
Very smooth. So introduce yourself to the audience in your own words, Bronson.
So great to be here. So I was a well-paid medical sales professional. I was making over $200,000 a year, working 30-ish hours a week, and life was good, right? I was making good money. I was doing these. I was going and teaching surgeons how to use this specialty equipment. But the thing that I realized that I didn't have, which a lot of people really want, is I wanted financial freedom, but more than anything, I wanted time freedom. And a lot of, I worked with a couple physicians that were making over $2 million a year each, but they were working 60 or 80 hours a week. And I just thought, I don't really envy them. I don't want to be in that place where I have money, but I don't have time. And so it really led me on a path to discover more about financial freedom, about, I started buying houses. It wasn't working as quickly as I wanted, discovered syndication, started raising money for real estate, and pretty quickly raised about $15 million. Now we've raised about $45 million. I was able to leave my corporate job a few years ago. And it's allowed me to really create the life that I want to create. So I really work with people to really, like my first book talks about firing yourself. How do you fire yourself and replace your working income with passive income? And so that's the game, right? Is figuring out, how do I develop more income without taking up more of my time? Or as Warren Buffett would say, learn how to make money while you sleep, right? So that's really what I love helping people with.
Yeah. Was there a moment, can you remember one particular kind of thing that happened in your life that kind of made you make that decision? Or was it just something that happened over time? Like you said, just seeing what you were seeing on a daily basis.
Yeah, I think it was a repeated thing over time. I think anybody who's worked corporate or often has had a business, there's times where if you don't set it up correctly, you just, the business runs you, or the boss, you have a micromanaging boss, and they're like, hey, how many more medical widgets are you going to sell this month? And it's just, getting those calls, I didn't like that, right? I wanted to be able to have more freedom. And so, like Braveheart, where he goes, freedom, it's like feeling that cry on the inside. And so it's something we laugh at, but it's true. It's this desire that continually, man, if I had something that I could do, that I could sell, or I could be a part of, for myself, rather than making some other company millions of dollars, that would be amazing, right? To be able to do that. And so obviously there's risks involved, but I think, to really be able to create the life I want. So, I love creating. I'm a songwriter. I've written over 100 songs over the years. I've written my second book now. I love traveling. This will be my 6th international trip, so going to Portugal. Earlier this year, I went to Mexico a couple times, went to, I'm trying to think where else I went. Anyway, I had a great trip to India and Nepal to do the base camp of Everest. And that was awesome, right? So these are things that, like, we say, oh, someday I'm going to do all this, but someday never comes. And so unless you actually schedule it, you actually plan it, you actually do it, then it's not going to happen. And so that's where the time freedom element, I think, is just so important, because you can make more money, but especially as you get older, and I know you're a pretty young guy, as you get older, you realize the years just go by. And before you realize that your life is slipping away, and you're like, man, I just want, there's these things in my heart that I want to do. I think most people have dreams and things they want to experience, they want to do, they want to create, and being financially free allows you to be able to do that.
Yeah, I think that's you hit the nail on the head. I'm sure everybody can relate with that in some sense of the word. The other thing too is how do people balance? Like you don't want to make the same mistakes when you go off and do your own thing too. Like I know a lot of I've had doctors in the fund where they went and they thought they were going to flip houses themselves or something like that, and they realized, oh my gosh, I just traded one full-time job to another full-time job. So what have you found to be kind of the balancing there, and making sure that you don't just create another, maybe even more intensive, time suck, because
Yeah.
I'm an active investor, and we have a really great team around us, so I know how I've been able to do it to some degree, but I'm still very active and work every day, and I enjoy it. But I'm curious, for your sense, somebody who's traveling a lot and doing things. I mean, how have you been able to set things up where you have that work-life balance very well?
Yeah, well, I think, a lot of people, we think most wealthy people that I know, I've had over 2,500 one-on-one phone calls with high net worth investors, typically over 2 million in net worth. And a lot of times we'll think, oh, I should be doing real estate. I should be involved. I should buy a second house or a vacation home. And they buy one or two or three of these and they realize it's not very passive. It's a lot
Mm.
of work. Even if you have a manager, you're still being asked to kind of contribute your ideas and thoughts and the toilet broke. What do we do here? Or the tenant's not paying. I mean, there's these things come up. And so I tell people that really the test is if you couldn't immediately 10x the strategy you currently have, you're not actually a passive investor, right? You're more active in it. And so, if you couldn't go from three houses to like 30 houses overnight, then it's not really scalable. And so that's where the thing of, really, how can I work where it doesn't take up more of my time? How can I invest in a way where it doesn't take up more of my time? So I think that all of us should aspire to be full-time passive investors. So, for me, for you, for all of us, over time, maybe we're active, but eventually, is there a way we could become fully passive? And just because we're fully passive doesn't mean we're not involved. I mean, nobody cares about your money the way you do, but there are things that I realize I can invest with other groups, and it would actually, I do a little bit of work on the front end to vet the team and vet the deal, but it was a much more passive experience than having to kind of run it all myself. So I think the challenge is we're kind of presented that real estate is great, and then people go buy single families, and it just doesn't get you there. And so that's one level. The other level is if you are active, I think, there's a guy named Dan Sullivan with Strategic Coach and talks a lot about this idea of having a self-managing company. Right.
Mm.
So what does it mean to have a self-managing company? Everybody go, oh, that'd be awesome to have a self-managing company. Well, how do you effectively do it is you have to find people that can help you when you're gone, right? So when I'm gone, the business, thrives and keeps going, maybe even better. I'm not a bottleneck at some of the way, and they kind of make decisions without me. So, but you have to learn how to delegate. You learn how to trust people, and it is a muscle. And they're not going to do it as well as you do. I mean, I find if somebody can do something at 80% of what I can do it, it's probably good enough, and we can work in coaching and kind of getting things there, and that's okay. And just, but to me, it was the exact opposite when I was in medical sales, making good money. I controlled everything, and so I had great results, and I counted on myself, whatever. But when I've got to count on other people, that's a whole different skill set of how do you build a company or build a investment group or something that actually runs well when you're not there.
Yeah, and I think it's so important to do that from day one if you have the opportunity to, because what'll happen is if you build the whole thing around you and then you try to make that pivot, that's when you're going to run into a whole lot of issues. And it's the classic analogy of steering the Titanic. The
Yeah.
bigger the machine becomes, the harder it is then to delegate and that kind of thing. So I think if you have the opportunity to do it purposely from day one, that's very important. So what brought you into the real estate world? What was kind of your introduction to real estate, and how has that evolved over time?
Yeah, so when I first started, I always knew real estate was a great investment just because people that are very wealthy typically are involved in real estate. So at 26, I bought my first house, ended up becoming an accidental landlord. This was an out-of-state job that I took, kept that house for years, kind of saw the cash flow there. I was like, oh, this is pretty nice. I get some cash flow each month. And so there's something I think subconscious that happens when you start getting cash flow from an investment. It's like, wow, this is really great. This works. And then that's where I try to do the scale of, buying more houses and scaling up because I wanted to try to, again, find a way out of my corporate job. Because I think, the more time goes by, and again, not everybody's in this position, but if you are a physician, an attorney, if you're somebody who works a corporate job, or like for me, or I was in sales, you can be very much treated like you're just a cog in the thing, and you've got to they're just squeezing you to have absolutely as much productivity as they
Mm.
possibly can get out of you. And if you can relate with that, it's like, I think being out of that position I mean, there was actually a time I was sitting right at this table, Peter. This was about 3 months after I left my 2 or 3 months after I left my medical sales job, and I was just doing some work, and what came out of my mouth was what I thought in my mind was my manager calling me saying, "Hey, are you going to sell more medical stuff? Are you going to sell more devices? And how's it going?" And getting those like friendly calls at the end of the month. And I just what came out of my mouth was, "Thank God I'm not doing that job anymore." Right. So I think sometimes like I think, a lot of people, we love what we do. And it's not that I didn't like what I did. It was fine. I was rewarding, it was good. But I think for me, it was also about the growth experience of being in a place that I could learn something new, right? And I can learn about new things. And now we've shifted a little bit. We're doing a lot of real estate stuff, a lot of multifamily, and we have over 2,500 units, but we're doing private equity. We're buying a business now that's a e-commerce business. We've done some oil and gas and other sort of private businesses as well. And it's just great to be able to continue to learn and grow and find new ways to create value.
How did you was there anything, I'm sure there's more than a few things that you learned over the years in medical sales that you've taken with you to your real estate journey? Just kind of basic foundational, skills that you picked up along the way, or what kind of things that have helped to kind of define who you are today and what you do?
Yeah, so I think there's a lot of things. I think for a lot of people think, oh, I can't do real estate. I'm a CPA, or I can't do real estate. I do these other things. I think if you're willing to learn, you're willing to be active. There's a lot of skills that come from just being in business or being around numbers, or people deal with projections or other things. It's all transferable. Even if you're just somebody's good at math. Or for me, I didn't realize actually when I first started in multifamily, this was about 6 years ago. I thought, I don't know, am I going to be somebody who's going to find deals, or am I going to be on the capital raising side? I kind of was trying to do both. And I think it was really helpful to learn the business. Like I analyzed, 50 to 100 deals, and was really kind of, very much in the beginning looking for deals, making offers and doing things. And then of course, I've had this 10 years of medical sales experience. It's like, maybe some carryover to sales there, right? And I didn't realize, raising capital really is a sales role. And so for me, I think just being able to read the room, being able to have conversations with people. So if somebody's a people person and they do have some sales skills. Now, sales, nobody wants to be sold, but everybody wants to be a buyer. Everybody wants to acquire things. So if you can come across in a sales role or raising capital, and somebody's just, hey, I'm here adding value. I want to try to find a way to help someone get where they want to go. That's a very high trust thing, right? If you say, hey, Peter, you start saying, I have this thing, I want to create more cash flow, I want to do this. If I'm good at asking questions, I can draw out what it is you need. And I say, hey, is there a way that I can help you? Maybe it doesn't benefit me at all, but maybe it just helps you get where you want to go. That's a very high trust activity, right? And that's the kind of person people want to have around versus, hey, you look great in this nice 1970 Buick used car, or, whatever, like you're coming on a used car a lot, right? Nobody wants that experience, but I think there's a way we can do it. So I think, whether someone has a background of sales, working with people or other things, or they're more on the side of, maybe the numbers and other technical things, there's a lot of value people can bring.
God, many, many, many years ago, I drove an old Buick Park Avenue, and man, I love that car. That was such a had all the bells and whistles, and just a big car. Had a bench seat. It was amazing. The comment made me think about it. But yeah, I think you hit the nail on the head. I mean, in so many different avenues. And Ed, do you mostly deal with doctors? Is that you feel comfortable talking to them? And when you're raising capital, you ever go back into a doctor's office and try to find them that or what strategy
Yeah.
deploying there these days?
No offense to my doctor friends, but doctors are kind of a pain in the butt. They're very well. First of all, they get a lot of people approaching them. I mean, if you think in our society,
Oh God.
who's coming and asking for money, it's doctors get a lot of people coming up to them saying, "Hey, look at this thing," or whatever.
Mhm.
But we do have some physicians invest. We have a lot of people that have had a business, sold a business, retirees, just people that are kind of regular folks that did well in business that are like, "Hey, how do I, or I want to I want to fire myself. How do I do that? I'm kind of at retirement, but how do I start generating cash flow?" And a lot of those folks, but we'll help anybody that, it makes sense and works for them, kind of for their goals, and they're of a certain net worth. But I think, yeah, I think one of the challenges, of being a physician, this is a kind of a side note, is the thing that makes them successful at being a physician actually limits their ability to invest in alternative assets. And I'll explain why. Is as a physician, you're very highly trained in one specific area. Typically, they're general people, but it's typically most specialists, and so they're really, really good at it. And there's data, and there's studies, and double-blind reports. All this information, and so they know that area super well. Then you say, "Hey, check out this multifamily deal," and for them, they don't have the information. It's
Sure.
very difficult. So you can give here's reports and say different things, but it's like they're going to have a hard time filling that level of expertise in this area that you just kind of presented to them
Yeah.
because they're so good at this one area over here. And so, and in deals, things never go as planned. They go better, they go worse. I mean, I guess you could say it's similar to medicine where things don't always go as planned, but you have so much data around a lot of it that you can kind of predict results. So I think it's kind of interesting. There are some physicians that are great at business, that are great investors, but it's kind of the exception rather than the norm, I would say.
I can agree with you there, 100%. I mean, we have I've a bunch of physicians. I love them to death. I mean, they're great people. I love talking to them, and they understand the business really well. But it's probably, yeah, to your point, it's probably not the norm per se. And it's always, it's just they're just living in a different world, on a day-to-day basis, and it's intimidating, and it can be overwhelming, right? I mean, there's all the different aspects of real estate investing and what goes into it, and then just all the different flavors. I'll say, I mean, for asset classes, and also it's like, how do you know what to do and what to get into and all that kind of stuff, and it can be a real challenge. And I'm sure that's where people like yourself come into play, because you're not so much a specialist in any one, like, we do multifamily, that's all we do. It sounds like you're somewhat asset class agnostic, or is that correct?
Yeah, yeah, we really try to solve problems, right? Because I think, people come to us, they have they make too much money, they have a tax issue, right? They're
Mm.
paying, a lot of these physicians or business owners are paying 50+% in taxes, right? That's a problem, right? If you're paying a lot in taxes, there's a way you can reduce that. One of the chapters in my book, chapter 9, talks about reduce your taxes potentially to zero and from a 25% taxable rate effectively to about a 1%, right? Just how did I do that? Well, it would be probably zero, but I live in California, which makes it a little trickier. And so, that's one thing is tax benefits. Another one is cash flow. Cash flow is what allows you to leave a job. It's what allows you to replace some sort of expenses in your life. And that's where you become free. You figure out what your rat race number is. For me, it wasn't that much. It was 5 or 6 thousand a year, excuse me, 5 or 6 thousand a month.
Mhm.
And then I realized if I could just have investments that would cover that, I was basically make work optional. And the last one really is appreciation. So
Yeah.
tax benefits, cash flow, and appreciation. So different investments we have offer different things. Oil and gas is great for cash flow and for tax benefits. It has some very unique, ordinary income tax reduction potentials. I'm not a CPA, but there is a way that with certain oil and gas investments, you can reduce your taxable income, which is incredible. I mean, it's one that's very, very rare. And there's other things like private businesses that are incredibly high cash flow, right? So those are things right now that we're looking at to try to help people with.
And then and you're working with different operators that are specialists in those fields, it sounds like, right?
Yeah, exactly. So my unashamed goal is really to own everything and operate nothing, right? So I want to approach it also like a passive investor, right? I don't want to just be a one-trick pony, which I mean, there are a lot of great operators and friends that do that. All they do is multifamily, or all they do is storage, or all they do is oil and gas, or all they do is, but if I can be somebody who approaches something as a passive investor, I invest in these deals and I bring my community alongside, and we have our mastermind as well, and just bring them into these deals as well. It's something we can do together. So I think again, there are times where real estate and multifamily makes a lot of sense. I'm loving it. We took about a 2 year break from multifamily, and now, late 2024, I think it's an exceptional time to get in because we're seeing pricing, discounted sometimes 20 to 30% or higher in phenomenal markets like Dallas or
Yeah.
Charlotte or other areas. And these are areas that are just booming. Everything else in our culture is 30 to 50% more expensive than it was 4 years ago, except for multifamily apartments. Of course, there's a debt piece to that, there's other parts of that. But to buy stuff when pricing is a little lower, rates are a little higher, and then if that starts to kind of an equilibrium over time, can be very attractive. So we do look at, again, different assets at different times, really achieving different goals. Those are all things that I think are important as an investor to look at.
Yeah, and I think from an accredited investor standpoint, that's going into the space looking for who to invest with. there's a place for people like you and what you do, and there's a place on the other side, like you said, for the people that kind of that's all they do, is multifamily or car washes or self storage or whatever, and they specialize in that field. I think there's a place for both, and I think in a for an accredited investor with a passive portfolio and diversifying, their management team, it's good to have managers on both sides of the spectrum, and I don't know exactly how do you have one, is it kind of like a fund, or is it you geared people towards individual syndications, or how does that work?
Yeah, we do it. I think it's an interesting thought to have like a hedge fund that does everything and kind of, but we do it very specifically from different assets. So we'll say this specific multifamily deal that we're offering in this specific market, or we'll say it's this specific oil and gas that's being drilled in whatever the area is of the country. And so we'll do very asset specific. And I like it better both as an investor as well as a syndicator, just because it's, if you have a bunch of deals and something is underperforming, well, how do you know which one of, if you've got all these different assets in there, or you've got 10 multifamilies in there, or 100, or you basically become a REIT, right? So how is it, you're really differentiating kind of what you're doing and what you're looking at. So I think those are a few things that we look at, is just trying to, how can you really easily analyze the deal itself and also really look at your performance. So I haven't been as much of a fan of funds for that reason, but some
Yeah.
people love them, and it does provide some diversity, which is great. And but I think it just really depends.
Yeah, you hit the nail on the head there. It definitely depends, and this way too, it allows with what you're doing, it allows the investors to kind of pick and choose what they want and what fits their needs and that kind of thing, compared to a fund where they lose discretion at that point. You know what I mean? So it's
Yeah.
the discretion to allocate to deals that make sense to them, that they're comfortable with, that is aligned with their goals and all, makes a lot of sense. Now, for somebody that's maybe trying to do it on their own, I'm curious for you who's doing it, through your company and all. What approach do you take when you're analyzing a new opportunity, and a new, from a deal perspective, like to what the deal is, but also the operator itself? How do you look at them? I think that could probably be some good insight for them to know what to look for when they're doing it themselves.
Yeah, so my book, I have this chart. I call it the deal flow funnel, and really, people would say, what's more important, the market, the deal, or the operator, right? Would say, what's the operator, or it's the deal specifically, and usually a deal comes to you first, but what do you look at? How does this look? So I typically start, the very top thing typically is the market, because I think that if you're in a market that's a growing market, growing in population, it's a growing as far as number of, certain types of businesses or certain types of demand for that specific asset, you're going to do really well. Even if there's kind of mediocre performance, because you're in the right market, the rising time raises all ships. I think that's the most important thing. Secondly, it is, and it's very important, is the operator, and does the operator have similar values to you? Is this a rinse and repeat for them? Have they done this before? Is it totally new for them? Or do they have, like what type of goals? What does it actually look like for the things does this fit in with kind of what they've done before? And then the last thing really is the specific deal. And, does the deal actually meet your objectives? And so, but, again, if you're putting yourself out there, you're trying to get deals as an investor, the deal comes to you first, then you have to take a step back and say, hold on, time out. What market is this? What does it actually do? Where is it at? Who's the operator? And does this deal then, once you get through this first two, does the deal specifically really meet the goal, the goal that I'm trying to, or the problem that I'm trying to solve? If it's tax benefits, then, maybe some big long-term thing that's going to 10x over so many years, like maybe that wouldn't be the best thing, because you're really trying to actually find, that other solution, right? So again, if it's tax benefits, focus on tax benefits. If it's something that is more cash flow, focus on cash flow. And so I think it's just continually to say, do all of these things align? Is this a growing market? Is this the right type of kind of area to be based on my goals? Does this sponsor kind of align with my values? Is the communication there? Is the performance there? Is the specific deal, does it also align with where I want to go? And do I understand really, how will I make money on this? What's the plan to make money? And probably more importantly, what's the one or two primary ways that I could see losing money, or it doesn't work out well? And then ask those questions of the sponsor. Hey, what do you think? What's the biggest risk of this deal? And they may give you a totally different answer, but it's just really important to kind of make sure you understand that, at least going in, what you're getting into and what some of the risks are.
Yeah. Wow. You bring up a really great point, and it actually kind of transitions to my next question. And You really need, and just I preach this all the time. I mean, you really need to know yourself. I mean, you need to know, like, because you're going to find yourself just, oh, you're just floating at sea at that point. And I mean, you have with no direction. If as deals come in, this looks good, that looks good, I like that, and just because something looks good doesn't mean it's a good deal, and doesn't mean that it meets your goals either. Because you can have a really good deal, but it just doesn't meet your goals at the end of the day. You know what I mean? If you need cash flow, the deal could be great for on the appreciation side. You might not see cash flow for a few years or something like that. You know what I mean? And
Right.
any of those other, the tax and cash flow and appreciation buckets that we were talking about before. Now you have a new book it's coming out, or is it come out already? Or
It's coming out. Yes, I've written most of it. My first book was an Amazon bestseller. We have about 800 reviews so far. This one is called Rich Brain, and this comes from a conversation I had on an Uber a number of months ago, where a woman overheard a call, and you probably have some of this where you kind of
Sure.
people don't realize what you do, and you're getting the $100,000 wire, and it's like, well, are you a drug dealer? What's going on? But she wasn't talking about money. She says, how do I overheard your conversation. How do I learn about money? How do I learn about wealth? And I just kind of thought, well, there's a book or two I can read, but there's nothing really that specifically talks about it. So this book called Rich Brain, it's how the wealthy change their brain to change their bank account. It comes from the over 2,500 interviews I've had with high net worth individuals. And really, a lot of it comes down to the mindset and also the specific habits, right? If you get your mindset in the correct place and then you do these specific things, it's almost inevitable that you will become wealthy, right? But a lot of times we don't, either we do one or the other. We try to take the actions, but we don't get the mindset correct. We do the mindset, we don't take the actions. And it's what are those kind of really wealth habits that people do that really get them where they want to go? So they should be out hopefully first part of 2025. Again, it depends how
Okay.
quickly I write and how much support I can get to kind of help you do the editing and all that. But I'm excited.
Oh, give us a little sneak peek, Bronson. What would you say is the number one or the first couple things, I mean, that
Yeah.
people need to do? And I think a lot of successful people, accredited investors especially, who have a certain level of success, they're probably doing these things to a degree, but they may be doing them unconsciously. They don't even realize it. You know what I mean? So I think you can really supercharge it when you know and you can pinpoint what it is you're doing and do more of it. But very curious to hear from you.
Yeah.
What would you say the one thing is, or those few things are?
Yeah, well, it was really surprising to me. I mean, one of the narratives we hear about being wealthy in our culture, and even if you're wealthy, I feel like I've become, my net worth, went up 20x over 4 or 5 years and went to a seven figure. Like, it's just amazing to see. But a lot of times, like I have this belief too that for most people, there's people that have and there's people that don't, right? There's people come from money or they have these advantages. 65% of people believe that people became wealthy because of their advantages, whether they inherited it, they went to the right schools, they had the right connections, but it's just not true. And there's a study that came out in 2019 that said that 86% of millionaires, Peter, are actually self-made.
Mm,
Right. So it's just
sure.
kind of shocking, right? That it's just completely opposite of the narrative. It's just people of 80s, almost 9 out of 10 people that are millionaires, they figured out a way to do it themselves. They didn't inherit it. They learned these things. So these are learnable principles. These are things you can change the way you think in your actions, and it actually can lead to you become, and that's the norm rather than somebody actually inheriting it or somewhere else. So that was very shocking. So one of the things around that to me became very apparent was the idea that there's this concept that I call wealth worthiness. And what it has to do with is it's this expectation or this feeling of worthiness of what I feel I deserve. Now, they've done studies and they've shown that people that most people's financial plan really is either, to become wealthy is to win the lottery or have their rich uncle die, right? Though, I mean, that's kind of it. But it does say that only 11% of people that win the lottery 4 or 5 years later are happier than they were
One.
when they won the lottery.
Yeah,
Because
or even have the money left at that point.
exactly. Yeah, because they didn't develop the character. There's a great ESPN documentary, 30 for 30, called Broke, and it's about all of these athletes that 85% of them are broke within 2 to 5 years, and it's very consistent. So one of the things, this idea of wealth worthiness is it's a feeling of high value, right? The idea that you are worthy of having stuff and having things. And for a lot of people, this happens actually over time. So let's say I have a job, I'm making 100,000 per year. I've heard another guy describe it as like a thermostat, right? So that's what I deserve. Somebody always find a way to make 100K because that's kind of what they feel they deserve. Somebody makes 1 million, they'll find a way to make 1 million, right? It's just this kind of inner thing that they will have. And so what will happen is sometimes they'll have 100,000, they'll kind of go to 200,000, kind of gradually over time, they'll start feeling more worthy as they start making more money. But where you see big bumps sometimes is somebody will already have that. They'll say, oh, I feel, and it's not something people necessarily talk about or they can say, but it's something that over time, you'll begin to see it because it's already manifested in their hearts. This is where the heart work, the mindset piece can work really well. One of my favorite books is called The Gifts of Imperfection. It's by an author named Brené Brown, and she has a famous TED Talk on vulnerability. And she says it this way. She says the difference between people who receive, great things in life, whether that's, relationships or wealth or whatever the things are, or those that don't, is that the first group felt that they were worthy of it. Right. So whether you receive or not, it's that feeling of personal worthiness.
Mm.
And it can be sometimes kind of hard to measure. And so, but I think, ways you can tell if it's there is when when something great comes around, it's like the light, there's an ability to see it,
Mm.
receive it, and say, this is for me. And this happened in my life. I'm going to share a quick story. This happened to me recently where I've been thinking about a 10x future of, okay, if I 10x where I'm at right now, what does that future Bronson look like, right? What am I walking in? What's that look
Mm.
like? Well, what kind of like, that's a different person than where I'm at right now. So I've been continually visualizing myself this way. Napoleon Hill says, spend 30 minutes a day, which is a long time, 30 minutes a day visualizing the person which you intend to
Yeah.
become. So if you're that, so I'm in that person, I've been doing this and kind of visualizing this and just taking time to say, well, this is the person that I intend to become. What happened is this deal came around and it looks like it's going to close in about 2 months, but it will about 5x the revenue in our business almost overnight. Right. So it's going to be like as far as cash flow, as far as growth, as far as everything. And how did that happen? Well, I really attribute that to being, it happened because I began to see myself as worthy of that. And that began to be work out in my subconscious. So when the deal came around, I didn't say, oh, well, that's nice for somebody. There's no, how could I never do that? It came alive. I said, well, no, maybe I can do this.
Yeah.
Right. Maybe I actually can do this. So again, there's a lot of subtleties there, but I think it really involves creating this bigger, better future, this 10x type future for yourself. And I think that's what really what keeps most people from having wealth, or even if they get it, from keeping the wealth.
Yeah. Wow. You hit the nail on the head. I think it's so important, especially for accredited investors. I think sometimes when you've achieved a certain level of success, that you forget about the basics, right? You know what I mean? And just and the mindset and all that kind of stuff. And yeah, and so you're busy, right? You know what I mean? You got your businesses going on, you're working, you're investing, you got your family, your friends, social life, all that kind of stuff. But yeah, the Napoleon Hill thing, visualizing, the 30 minutes a day, it's like just doing things like that. I mean, just getting back to the basics and just letting those we all have those thoughts where I can't do this and I can't do that. And what is that voice in our head, right? That pops up to tell us that we're not worthy, that kind of thing. And it's like, that's just as important as all the other stuff is. I mean, the due diligence, the underwriting, asking the right questions, research data, all that kind of stuff. The internal battle is equally as important. And I think for very successful people, a lot of them are very successful because they do that kind of stuff. But I also think a lot of times, with the people that I deal with, I think that would do them a lot of good. You know what I mean? And it would just provide so much clarity and vision and focus in their investing. Yeah. So they really know, that they're investing intentionally at the end of the day. Because a lot of times, and I'm sure I've spoken to about as many accredited investors as you had, and you've probably had the same experience where not everybody has that intention. It's just people are they're all over the place. And
Yeah.
I think community investment communities and clubs are becoming more and more and more popular. A lot of people are in them. And a lot of times it's just like anything else. It's like social media, right? I mean, it provides a lot of access and knowledge and connections and all that kind of stuff, but it also it could be it could be overwhelming, right? You know what I mean? It could be hard to say, okay, I have access to all this and that's great, but now what am I going to do with it? And how am I going to leverage it to get to where I want to be? All that kind of stuff.
Yeah, 100%. No, it really is. Again, it's looking at the things, not just, hey, what am I doing, but it's how am I approaching this, and who is the person that I am that's approaching this, and even other people in the networking and things. It's just so when you can create from internally, you show up, and this is how people like Elon Musk and people that have done amazing things. Like, I'm going to Mars. I'm like, oh my gosh, how was that even public? But he visualized, he saw it, he became that person,
Yeah.
and so he shows up, and then people actually are able to achieve impossible things. And and I'm not even talking about impossible, but many people become wealthy, right? You just show up in a way that's a very different mindset, a different heart. It's just amazing what it can do.
How have the books changed your life? I mean, that's one of those things. I'd love to write a book. I just haven't done it yet. I've been thinking about it a lot. I'm always curious when I talk to people who have written books, especially you're on your second, so there had to be some success with the first, right? I mean, and it sounds like you've had amazing success actually with what you're saying, with just where it's gone through Amazon and the reviews you've got and all that kind of stuff. So, how's it changed your life? And would is that a suggestion you would make to people to bite that bullet and do it, or what?
Yeah, I have a lot of thoughts on this. So, they would say if you poll the public, like adults in the U.S., 82% of American adults would say they have a book in them to write.
Okay.
Right. So almost like 8 out of 10 would say, yes, I do want to write a book, but only 0.5% have actually written a book.
Wow.
And of those that start, only 15% actually finish. So it's not, I wouldn't say it's easy to write a book. It's challenging to do. And actually, what happened is I made a decision. I went to a Tony Robbins event. I'm a big mindset person. Obviously, I went to a Tony Robbins event, made a decision to write the book. This was a couple years ago. And then I just was searching online, how do I write a book? What's the way? And what I found is a really great strategy where I just took 5 days a week as part of my work day. I took 60 minutes a day, and I would just put it as a calendar schedule on my appointment, like an appointment there on my daily. And I would just say, okay, I'm going to set the timer and write for 60 minutes. And I put my headphones on, or I just write. And I usually get about 1,000 to 1,200 words down, right? I just start writing. And then after a couple of months, I had, 35,000 words. I had most of my book kind of generally done, got it to 80%. And then I realized, okay, I'm here, but I don't know if I'm actually going to finish this thing. So I hired a coach and said, hey, I need help with titles and names and this and that, and just kind of get me through the process. And at the end, it's not, finishing a book is one thing, but it's actually selling copies is more challenging, right? So selling 1,000 copies, I think only 10% of books that are published sell more than 1,000 copies in their lifetime. So there's a trick to that as well. But I think getting help, finding people that have done it, finding ways to, if success leaves clues, right? So find out people that have done great things and try to get into their network and figure out how to make it work.
Yeah. Wow. Well, that's great advice for a lot of different things, right? And especially making investments and things like that. Especially if you want to be a passive investor, and you want to leverage the hard work of active investors and things like that. Being in the right room with the right people and with the right experience and the right connections is everything. I love that. So how can people take this conversation further, Brunson? How can they get involved with you and learn more?
Oh, thanks, man. It's been a pleasure being here. Yeah, I mean, we love talking about anything related to investing, alternative assets. A great way, I've got this awesome guide that I wrote called How to Use Inflation to Your Advantage. Inflation's kind of come a little bit out of the spotlight in the last, year or so, but it's still very present. And I think it's much higher than what's being reported. And so, buying real estate, using precious metals, there's some borrowing strategies, some things people mostly haven't heard of. If you text the word inflation to the number 33777, the word inflation to 33777, so 3733777, I'll send you that guide for free. It's a 40-page guide. Love to share that with you, and that'll get you in touch with kind of what we're doing, and also share about, we can learn about more our investing deals as well.
Awesome. Well, thank you so much for being here with me. I really enjoyed the conversation. This stuff is right up my alley. The mindset, all that kind of stuff, and then actually bringing it into reality. And using all that internal work in your real life on a day-to-day basis. So to talk to somebody who's making that happen and doing it, and sharing that with other people is inspiring and always exciting. So I appreciate you being here with me.
Thanks, brothers. A lot of fun. Thanks for having me. I really enjoyed it and look forward to chatting soon.